Hello, trader friends. Thank you for coming back and joining me with session number 2. We're going to jump right into the lesson. So give me 1 second to share my screen and we'll get right into it here. Just takes me a minute to get to the correct screen. So hopefully we made it. You should be looking at my Welcome to Jennifer's Trading Webinar Series for 2016. Today, this is session number 2, and we're going to be talking more about the MACD. In today's session, we're going to be adding a buffer to your hopper. If you don't know what a hopper is, please review the recording from session number 1, where I introduced you to a MACD trading strategy called the hopper. I'm going to be showing you how you can have expectations about momentum from the MACD. When change is occurring in the market, it might be a good time to trade, but if the MACD rolls over 0 against you, you don't want to argue. I'm going to show you some ideas about that. The position of the MACD above or below 0 really shows you what's going on in the market, and that's what today's session is going to be about. So let's, before we get going though, I like to do a quick review of what we already talked about in the previous session. So in the previous session, I introduced you to the idea of a hopper. What's a hopper? It's when the MACD hops over the 0 line. It's very simple. MACD line crosses 0, it's a hopper. When the MACD line crosses 0 going down, it's a signal that something is changing in the market, in the current market condition, and this might be a good time to sell. And when the MACD line crosses 0 going up, it's a signal that something is changing in the current market condition, not lagging, but current market condition. And this might be a good time to buy. The MACD watches the interaction between a fast line and a slow line in the background. So it can compare what's happening right now with what was happening just a little while ago. Why? It's all about identifying change in the market conditions. When the market conditions are changing, that might be a good time to hop on a new trade. That is all a review from the previous session. And today we're going to get a little deeper into our discussion and into our study together of the MACD. MACD stands for Moving Average Convergence Divergence. Divergence is when a fast line is racing away from the slow line. The market is doing something different than what it was doing a little while ago. When something's on the move and something's happening, we're going to get divergence of our fast line racing away from the slow line. And convergence happens when the fast line holds a sideways level long enough that you could say there's not much change in the market as compared to what it was doing a little while ago. And as the fast line holds a sideways level, the slow line can catch up to it. So that's just a real quick explanation of divergence and convergence that you can't see in the MACD, but the MACD is looking at in the background. Okay, so just to get your head back in the game with me here, I want to review the hopper, what it looks like. It's a hopper when the MACD line, I'm going to grab my little laser pointer. When the MACD line, which is this blue heavier line on my MACD window, crosses over the 0 line going down, it might be a good time to sell. And the hopper is a very simple but very powerful signal that you can get from the MACD indicator, which is an indicator that's freely available on almost every platform, even on your mobile devices. Here's one going in the opposite direction. MACD line, the blue line, was below 0. When it crosses 0 going up, it might be a good time to buy. So it's just a simple signal with a powerful message about something that's happening right now in the market that's different from what was happening. This is a great example because what was happening in the market previously to the hopper was kind of a quiet sideways, nothing too much going on. And as soon as we have decision and a little bit of momentum building in, the hopper and the MACD are going to alert you to that change in the current market environment so that it helps you out to get the best possible timing for your trade. MACD line hops over 0, you gain really valuable information. When the MACD hops over 0, you get timing because something is changing in the market right now. And you get direction, which we're going to talk a lot about today. Above 0, when the MACD is above 0, market direction is up. And when the MACD line is below 0, no matter which way it's pointing, if it's below 0, market direction is down. That can be also extremely valuable information that you get from the MACD. The MACD is very good at detecting momentum. Today, we're going to talk more about momentum. Last time we talked about the hopper, it was all about direction, but we're going to add to that some ideas about momentum in this lesson today. I am going to pull a couple of new ideas together here, so just bear with me while we build out a little bit of information that will stay with you for as long as you trade and as long as you look at the MACD. If you use the MACD, you've probably seen the histogram bars pushing out a visual demonstration of momentum. And I wonder if you ever thought about how that works. Kind of looks a little bit intuitive, like waves of momentum. And today I'm going to make sure you understand exactly how that works, and so you don't feel any confusion or hesitancy with regard to what the MACD can share for you. Today's academic lesson is about momentum. Now, I promised you an academic lesson for each and every one of my sessions here. And if you love academics, then you're going to like this part. If you don't, just sit tight. It's never going to be more than 1 or 2 screens. I promise you that. So today, our academic lesson of the day is the anatomy of the MACD, and really understanding what these lines, where they come from, and what they represent and why. So the MACD line we've already talked about. That's the heavier, faster moving line that's shown in blue on my chart here. And that line, as we learned from our last lesson, is watching a space between a fast line and a slow line in the background. Okay, as it moves, it's just detecting change between 2 lines, between 2 moving averages, a fast line and a slow line. Now, the signal line we haven't talked about yet, and it's one of my favorite things to talk about. The signal line is actually watching the MACD line. All right, so we're going to have more about that as we go. But the signal line is watching the MACD line, and it's taking its calculations off whatever's going on with the MACD line. And the histogram bars what that is a bar graph demonstrating the space between the MACD line and the signal line. So you may or may not have known that, but this bar graph is identifying how big of a space there is at that point in time between the signal line and the MACD line. So there's 2 ways to see that space, but the bar graph is very good at demonstrating it looking like a wave of momentum, which is exactly what it is. But when you understand where it comes from and why, you're going to have another level, just another layer of information that I think will be very useful to you. And then the zero line, last but not least, it's not really a line unless you draw a line there. It's more of a level between the positive numbers and the negative numbers. And that is the key level to watch. And I'm going to tell you why all of those things is true as we go throughout this lesson today. The signal line is a moving average of the MACD line. Now, you might remember from last time that the MACD is keeping track of the space between a fast line and a slow line. MACD is watching for change in the current market conditions. I'm being super redundant here and repeating a lot of the stuff that you've heard in the past lesson, and you're going to hear it again in the next lesson so that it really sinks in and can really make a difference in your trading life. So now what's new today is that the signal line is a moving average of the MACD line itself. So another way to say that is the signal line shows you what the MACD line was doing just a little while ago. So when you compare that signal line to the MACD line and what that's doing right now, then you get a visual demonstration of momentum building or fading as in price action. Okay, so I'll show you exactly right now how that's going to work. So if you feel lost, just stay with me. I promise you, this is not rocket science. This is stuff you can grasp if you just stay with it for a few minutes, and you'll be so glad you did, because it really will improve your trading. All right, so in this example, the MACD line, right where the MACD line is currently, you can see that the signal line is quite a long ways away from it. And so the signal line is showing me what the MACD line was doing a while ago. And compared to just a little while ago, the MACD line has made a lot of progress. And that's because we have momentum. We have something on the move, something that's actually happening very, very quickly. Whereas this point in time, the MACD line and the signal line are right on top of each other. And what that means is the signal line says, hey, what you were doing a little while ago is exactly the same thing that you're doing right now. No change, no momentum, nothing happening. And so that's a really important distinction. So when there's a wide line between the signal line and the MACD line is on the move, because the signal line is just sort of marking what the MACD line was doing just a little while ago. And that's how it builds out this visual demonstration of momentum. So as the MACD line is building and, is really racing forward, and there's really a big change in what's going on with the market, we're going to get a wider space between the signal line and the MACD line, and we're going to get a taller histogram bar, and we're going to get a picture of momentum building. And that would be as opposed to when the lines start to come closer and closer and closer together, and the histogram bars are demonstrating a shorter and shorter space. And that is because the momentum is fading out of the market, because what was happening just a little while ago with the MACD line is pretty similar to what's happening now. And as it becomes less and less of a change, we see everything fading its way back down towards the zero level. And just so you know, the zero level is where everything is loaded and ready to go with the new move. So don't think of the zero level as asleep. Some people think the MACD is strong when it's up here. Actually, the MACD is strong when it's down here at zero, ready to push out a new direction and a new wave of momentum. All right, so we'll move on here. The zero level is loaded with potential. Now, MACD positions above or below zero tells you the story. MACD line, anywhere below zero, indicates a downward direction in the market. So if this is a picture of a MACD and the line in the middle is the zero level, as long as the MACD is below zero, even if it's working its way up from a low up towards zero, the overall direction of the market is still down as long as that MACD is below zero. As soon as it makes a hopper, then we have a change in overall market direction. It's a very important distinction to make. And it also is very valuable, as you can imagine, not just for getting into new trades, but if you're wondering if you should just hold your trade a little longer or go ahead and close it, as long as that MACD line is holding in your in the sell position and you have a sell trade on, you might want to have the courage to hold that trade a little bit longer, as long as the MACD stays below zero, and not exit that trade too early, as opposed to a time when the MACD hops over zero and it says, don't argue. It's a change in market direction. It's time to let it go. All right, so MACD line above zero indicates an upward direction in the market, and that is true even when the MACD line is dropping down towards zero. Until it crosses over zero, it could just be reloading on momentum and ready to make that next move up. So it's very useful to remember that the position of the MACD above or below zero tells you the story. All right, so when MACD is right on the zero line, it's not asleep. That is when it is full of potential. Now, it very well may be a quiet sideways market that happens to bring the MACD back to zero. But even a quiet sideways market is ready to break out, right? So as soon as direction and decision comes back into the market, the MACD is going to be in position at the zero level, ready to roll out a new move full of momentum. So MACD line on zero means that it could be getting ready for a nice long run in one direction. But I also acknowledge that it could be a slippery place for the MACD, while we wait for the market to pick a direction. Have you ever seen the MACD line kind of make a hop up and then a hop down and then, oh, wait a minute, now it's back up? When it's laying right there on top of zero, it could look like it's wiggling up and down over the zero level. And you might be thinking, gosh, it's not working. Well, it is working. It's doing its job. The market has not shown up with a decision for direction, and the MACD is holding its level there at zero, ready to go as soon as the market is ready to make that happen. Okay, so MACD at zero is waiting to show you the direction as soon as it happens, as soon as it comes into the market. Zero is also full of momentum potential, which is great to know. When histogram bars are flat to zero, it's like a compressed spring, just waiting to be released so that it can push out with a new wave of momentum. So that might be a new thought for you to think about. The MACD shows you its fullest potential when the lines are flat back to zero, and even in the midst of a downtrending pattern, when the MACD comes back to zero, that's when it's ready to roll out the next leg of the trend. So as the trend progresses, it might go sideways for a while, it might go into a deeper retracement, and then when it's ready to make the next leg of the trend, the MACD carries on. So this example is demonstrating everything we've talked about today so far. MACD line below zero really calls the direction of the market, even as it's working from this low point on up to this working its way up towards the zero level, as long as it stays below zero, you have to say, the MACD is telling me overall direction in the market is down. Don't get too excited about going long until it hops over zero, calling for a new direction. And as far as the zero level goes, the momentum, which is the histogram bars, and direction, which is the MACD line, they all start from zero and they push out from there. All right, so during the sideways activity, there were a lot of little hops up and down over the zero level, and this is when people get discouraged with the MACD and feel like it's just not quite working. It is working. Look at what the market's doing. Nothing. Right? So, and this is true on any time frame, on the short time frames, on the long time frames. Of course, from time frame to time frame, the spaces are a little bit different naturally, but when the MACD line gets down to zero, it is waiting for the market to come up with a decision for direction, and when it does, it calls it, and it builds out momentum from there. All right, so since you might have experienced the situation where you get into a hopper and then it goes against you, and then you go down, and then it goes against you again, and then you go up, I'm going to talk to you about adding a buffer to the hopper so that you don't get in too soon. So we'll be talking about that in just a moment. Oh, actually right now. I thought I was getting ahead of myself. I'm going to grab a drink of water. Give me 1 second. Okay. When it comes to trading the hopper, sometimes it would be helpful to see the MACD go a little bit farther than zero before we trust it, especially if it's in a quiet sideways pattern where it's kind of flat to the zero level. It doesn't mean it's asleep there, but if we have a sideways market, we're waiting for the breakout. It's kind of like trading a breakout. You wait for the market to make a move above or below kind of that sideways range. So it's the same thing with the MACD in that instance. So the MACD buffer is telling the MACD how far you want the MACD line to go past zero before opening your trade. So for example, you could, when we had a buy hopper signal here, you might have wanted to let the MACD go a little bit farther than zero, or even get up above one of the histogram bars before you open your buy hopper trade. And this is just, smart discretionary trading, keeping an eye on things. You'll notice that the MACD rolled over zero as if to hop down, and then as if to hop up. And that could go on for a long time, to hop down, to hop up, to hop down, to hop up. So if you put a buffer on it, you're saying, I'm not gonna buy it. I'm not going to believe it until the MACD gets a little bit farther, lifts a little bit farther off zero. And so a buffer is determining how far off past zero do you want to go before the trade opens. A couple of different ways we can estimate that. Of course, it's going to change from symbol to symbol and from time frame to time frame. But one thing that I like to do is get below the histogram bars. So if we have a very quiet sideways area, I might draw a line across some of the previous histogram bars and wait for the MACD to get below that level. There's a lot of different ways that we can identify where to put the buffer, but the idea tonight is just that if you want to buffer your MACD, or I should say buffer the hopper, it's smart, especially if you have a market that's waiting to break out, so you don't get into your hopper too soon. So how big should the buffer be? And again, there's no right answer here. It depends on a lot of things like time of day, the time frame of your chart, trading a breakout after a sideways market versus just trading normal volatility. Trading 5-minute charts for small profits is going to give you a different kind of buffer than trading a day chart, for example, for longer profits. But the MACD works exactly the same on every time frame, and for that matter, on every trading instrument that you could possibly trade. Now you know what a buffer is, so let's get back to momentum for a minute, and then we're going to put things all together. Okay, so when the MACD line is right on top of the signal line, there's no momentum. Remember, we were just talking about that a minute ago, because the MACD line is doing exactly the same thing now as it was doing a little while ago. Signal line shows you, hey, this is what you were doing. MACD line is doing something new now, or it's doing the same thing, and that's going to give us the difference between MACD gapping away from the signal line or MACD being right on top of the signal line. So when the MACD line is moving away from the signal line, it demonstrates momentum, because right now in that moment, not lagging, but in that moment, it's doing something different than what it was doing just a little while ago, and that brings us to momentum. Once again, I got the same chart up just to bring your mind back to what we were talking about here. MACD line is distant from the signal line, and that signal line is telling us what the MACD line was doing just a little while ago. And now it's made a great amount of progress versus a period of time where the MACD line and the signal line are right on top of each other. And that's because The MACD line is doing the same thing now that it was doing a while ago. So that's why they get, flat right on top of each other. It's the space between the lines that gives us these histogram bars. And so when they're right on top of each other, there's no change, no momentum. And when there's a big gap between them, then we have a big histogram bar demonstrating momentum is happening. Good information in the moment as a trader for you guys to have. So the histogram bars are momentum. I refer to them as momentum bars. The histogram bars demonstrate the difference between the signal line and the MACD line. When the histogram bars are getting bigger from zero, momentum is building. When the histogram bars are shrinking back towards zero, not building from zero, but back towards zero from someplace away from zero, then momentum is just fading or slowing down. It's not a change in direction. It's not a wave of strength. So that's a really important thing to try to keep in mind, that there's a big difference between histogram bars building from zero. If it's an upward wave of momentum, those bars are getting taller and taller from the zero going up. And if it's a downward wave of momentum, it starts from zero, and those momentum bars are building from zero, going longer and longer going down. But if those bars are already tall and they start shrinking back towards zero, that is not momentum. That just means that the momentum that was happening is not happening anymore. And it's a good thing to be aware of, so that you're not confused between the difference between momentum and just a fading momentum bar. Get momentum pushing behind your hopper, and you get a good bet for direction and momentum being in your favor in that moment, at that point in time. So I'm going to show you what that looks like. The ideal situation is when the MACD hops over zero, so it makes a hopper, but you'll notice that it took a few bars before the MACD line got ahead of those momentum bars. When the MACD line is leading and momentum is able to push behind it, we have the best possible visual demonstration of a good time to enter a trade, where you can expect you got the direction and now you have momentum pushing behind you. As opposed to a situation like this, where we get the MACD hopping over zero. Okay, it was a hopper, but the histogram bars are way ahead of it. In my way of thinking, that momentum, that upward momentum, is already spent by the time the MACD crosses zero and hops up there. So at best, it's going to take a little bit of time for the MACD line to be able to take the lead over it. At worst, it's just going to push the MACD line right back down and roll back over zero, which is what happened here. So I like to think of it as going running in a headwind. Sometimes a strong runner is going to be able to do it and push through the headwind and keep on going. But a lot of times, probably more often than not, that runner is going to turn around and go back. And so that's kind of how this looks to me. So you think about when you have momentum pushing behind your hopper, you have a good bet that you have your timing right and you have momentum on your side as well. Chances of success are just simply increased when direction leads momentum. When it's a buy hopper, you want histogram bars pushing up on the MACD line. When it's a sell hopper, you want histogram bars pushing down on that MACD line after it hops. Okay, so in this instance, where the MACD made the hopper, MACD line hopped over zero going up, and those histogram bars were already spent. It's a better bet that you're going to get momentum pushing behind you if you wait to enter that hopper until you have momentum behind you. Now, I am not saying that it's impossible for the MACD to keep going. It certainly can. But I'm talking about probabilities and looking for opportunities where you have momentum in the right position to push behind your trade. Here we had a hopper going down, and it took about 3 or 4 bars before the MACD line, which is direction, was able to take the downward lead and having momentum pushing behind it. So chances of success are simply increased when you get direction leading momentum and momentum pushing behind that direction bar. Sometimes you need to buffer a hopper to make sure that the MACD is leading ahead of the momentum bars before you trade. Sometimes the hopper happens with momentum in the correct position to push the direction of your hopper right out the gate. It just depends on what the market throws to us. And a couple of things to say here, where we had this kind of sideways choppy activity. We had these hoppers up and down that really didn't hold for any length of time. This is not a failure of the MACD to tell you what's going on, because as soon as the market demonstrated that it was not going to hold a position, the MACD let you know by rolling over zero. So it's not really the MACD's fault that the market's going in a sideways choppy pattern, right? So what the MACD is there for is to help keep us alerted to that, so we don't stubbornly hold on to a buy trade when the MACD drops below zero. If it's in a position below zero, market direction is down. Now, if market direction is down and the MACD line is all the way down here and it might be coming up, 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 up for a long time, headed back towards the zero level, what's the direction, overall direction in the market? The overall direction of the market is still down until the MACD crosses zero. Now, that doesn't mean you can't implement some sort of counter trend trade or something like that, but it is clear what the market's doing so that you are clear about the trades that you're planning to take in that particular market environment. The button program is a program that I have that will be for sale. It will be on sale again next week. It is not on sale at the moment. But I built this program to automate a lot of the hopper strategies that I'm teaching you in this series. It's certainly not required to trade the hopper, but it's very convenient. And because the MACD is so mathematical, it's easy enough to program it into automation. So I did that with these interactive buttons that sit right on your charts, and you can click any one of them to activate one of the hopper strategies. With the button program, you can apply a buffer, you can change the MACD settings, you can tell it to place the stop loss and profit target. You can tell it to close your open trade if the MACD rolls back against you over the zero line going the wrong direction. So the button goes on sale again next week, and I just wanted to give you a heads up that you can get on my email list if you want to be informed when it is available. And I'll also be asking or trying to get a link put up with my recordings here next week at FX Street for anyone that's interested. You can send me an email if you have questions about the button program. So I just wanted to show you a couple of quick examples where you could have a buffer in your hopper where the hopper trade's not going to open until the MACD line lifts a little bit, whatever you tell it, off the zero level. Once the trade opens, you could even set the MACD close button, which means if the MACD line rolls over zero against you, it will immediately take you out of the trade. So it just automates the strategies that we're talking about because they're so mathematical. You don't have to sit there and wait and watch for it to happen if the program can. So when you're ready for the program to take over, you can click a button and it will take over watching that for you. Here was a hopper with a 0.002 buffer, which means that the buy hopper trade won't open until we get 0.002 farther away from zero. So I drew a line there so you could see what that looks like. In this example, maybe I wasn't sure that we were going to get a market move in the upward direction above the moving averages there, and could just as easily find some resistance at that level, and the MACD could roll over at zero. The momentum bars would be behind it to push it down. So I don't want to get in that buy trade too soon, but I still can. I can still do that even with automation, because all we have to do is tell the program where we want the buffer, and then it will hold off on opening that trade until the MACD goes that far into the hopper position before it opens the trade for you. And just to teach you how to apply a buffer, this is actually a perfect example. In this example, with exactly where price is going to do one of two things. It's going to swing through this outside range pattern one more time to the upside. We have a really nice space right here just waiting for it. Or it could find some resistance there and go right back down to the bottom where it just was a few minutes ago. And the MACD really, really leads the way on that. So if I get it wrong, the MACD close takes me out of it immediately, right? And manually, for doing this discretionarily on your own, if you were to enter a buy trade right now, and the MACD drops back below zero with those momentum bars behind it, ready to push down, you would know very definitively, I'm not going to argue. The market has chosen its direction and I'm not going the right way. It's time to let that go. Very extremely valuable information that keeps you on top of your game as a trader. So I call this upside down momentum because the direction line is about to hop into those momentum bars that have already been spent. This means that at best it might take some time for the market to really get moving. So it might mean the sell hopper is less likely to succeed, at least on the first try. So this is all about identifying a hopper that has a little bit less probability of success, at least on the first pass. That's important to know because, as you have probably figured out by now, every single time the MACD rolls over zero, it may not be the best trade for you. But it doesn't there's just so much more that you can see coming. If you see these momentum bars in the way, you might wait on that hopper and say, you know, if the hopper happens, I'm going to wait. Maybe it'll roll over zero a couple of times before it's ready to take off with momentum behind it. Maybe it will just go straight through those momentum bars without you. You know what? All I'm doing is trying to look for increased probability. And if I know there's increased probability by waiting for the MACD lines or the histogram bars to get behind me, then I'll wait for the histogram bars to get behind me so I have the best probability of momentum being there. In this example, I set the button for long trades only, meaning I disabled it for taking any kind of a short trade so we don't have any mishaps with automation, which happens, you know, that happens to be a problem with automation. And I set the buffer to, again, 0.002 so that the buy hopper with a buffer will only open if the market is indeed ready to move in the upward direction. Because again, from here, it's entirely possible the market could just slip in the downward direction, or it's entirely possible it can roll over right here and go back up. So I can really be ready no matter what the market does. If you don't know what you want to do, sometimes the hopper and the MACD can sort of help lead you. If you do know what you want to do, you can wait for the MACD to lead you into the best possible timing and the probability of momentum being on your side. All right, here's the review for today's lesson. The MACD line, it tells you when something's happening right now. The signal line tells you about momentum, because if the MACD is doing the same thing right now that it was doing a little while ago, there's no momentum. The signal line watches the MACD line, and it gives you a visual demonstration when the MACD is on the move or when the MACD is just doing the same thing that it was doing before. So it gives you a bar graph to demonstrate momentum when the MACD line gaps away from the signal line. The histogram tells you when momentum is building, and remember, it builds from zero. Shrinking back to zero is not momentum. Momentum always builds from zero, so don't confuse the two. One is got a bunch of energy to push the market forward, and the other, all it means is we have that energy dissipating out of the market, and it might mean that we have a new direction coming, or it could just be, you know, consolidation. It could be a lot of different things, but it's not momentum, and so it's really useful to be able to know the difference. The zero level tells you everything. MACD line above zero tells you that the overall direction in the market is up. MACD line below zero tells you that overall direction in the market is down. And when histogram bars are flat to zero, it's full of potential. It's like a spring that's been compressed and ready to push out a new wave of momentum as soon as decision comes back into the market. When direction leads momentum, that is, the MACD line is ahead of those histogram bars, you have a good bet for your trade when it comes to timing, direction, and momentum. Zero can be a slippery slope, but that doesn't change the fact that it's where all the potential is. So be ready to follow your MACD. Don't fall asleep while it's laying there on the zero level, going sideways for a length of time. Really, that's when you should be paying the most attention and getting some trades ready to go, whether it's pending orders or using the button to automate the move as soon as it happens. Because, I mean, it could be soon, it could be a long time, right? But MACD line is direction. Those histogram bars are momentum. And when you get momentum pushing behind direction, you get a good bet for your trade. Sometimes that means waiting to open a hopper until the MACD line goes a little farther than zero, and that's called a buffer. The buffer is a hopper strategy that is going to increase your chances of success. All right, so that's the MACD. Now you know. When you know how the MACD works, you trade better. You can't stop yourself. It's just a fact of the matter. And I'm anxious to hear how that goes for you. Coming up next time, we're going to be adding expectations about when momentum might show up based on price action. Can two moving averages give you an expectation about momentum? Yes, they can. And I'm going to share that with you in our next lesson. So I will see you on Monday evening. I'm Jennifer. Thank you for joining me tonight. My email address should be on this page, but it's not. It's combotraders@gmail.com. If you have questions, you can let me know. All right, if you stay with me for just a second, I'm going to stop sharing my screen so that, hi, wow, there you are. There I am. So that I can go look at the questions and see if there were any questions before I let you go. Okay, when multiple moving averages cluster together, shrinking histogram bars is not a change of direction, question mark. Down but slowing momentum. Well, you're asking multiple questions there, and I'm not entirely certain what you're asking me, but let me try to break it down. First of all, I don't have multiple moving averages that cluster together, but if you did have multiple moving averages, I usually have two, but let's just say you had 2 or 3 or more, and they all cluster together in one place, it's possible that the market is going to go sideways at that level for a length of time. Shrinking histogram bars is not a change of direction. That is correct. It's not a change of direction. It's not even a counter trend signal. I'm going to teach you what the counter trend signal is in one of our next presentations. Do you see me going like this? I'm like all getting into it. What I'm trying to do is tell myself what I'm thinking. So shrinking histogram bars is not a change of direction, and it is not momentum. All it means is that momentum that was happening is no longer happening. It's fading. Can't say it's going down because that gives the wrong impression. So like it was pushing, and now it's not pushing anymore. That's what it means. What comes next could be a whole host of things, and I'm going to show you how to get some clues about what comes next in our next lesson. All right, I'm trying to find the Google Hangouts. There we are. Okay, thank you so much for joining me and for visiting the recording page and for your emails. Please let me know if you have any questions, and I'll see you next week. Bye, everybody.